Welcome back to another technical analysis video. This is Samuel Morton. In our last two videos we looked at Japanese candlesticks. More specifically we looked at engulfing candles and pin bars and how these candlesticks can help us when trading a trend, an uptrend or a downtrend. In this video I want to look at how pin bars and engulfing candles can help us trade ranging markets when price moves in a sideways direction between an area of resistance and support in the market. So in all these videos so far I've used the pound against the dollar, a 4-hourly chart. This is the chart that's in front of me. When I showed you a range originally in these videos, when we looked at price behavior, I used this range in October and November, and I use this same price data now to show you how to use engulfing candles and pin bars to trade ranging markets. So with all ranging markets we have an area of support and resistance. So let's mark our area of support with a trend line. So let's just mark it around about here. Just a reminder that these levels of support and resistance generally are not a specific price but areas within the market. So you'll see this support that I've marked has received some rejection here, here and here. We had a minor breakout of this support which was quickly corrected. We have rejection here. And once again, a minor breakout that was corrected. And let's mark our resistance area. Let's mark that here. So once again, we have rejection here and here, rejection here. So as discussed in previous videos, engulfing candles can show us where the momentum or strength is in the market. We talked about in an uptrend how we should have significantly more bullish engulfing candles, and they can show us that momentum's on the upside and also give us signals to open positions to go long. And we also looked at downtrends and how bearish engulfing candles should appear more often on a downtrend than bullish, as momentum is on the downside. And once again, these engulfing candles can be used as signals to go short and join the trend. We also looked at pin bars that can act as a signal to identify the ends of pushes and pullbacks. Now let's look at pin bars and engulfing candles on a ranging market. As we know, in a ranging market we have support and a resistance, and price moves between these two. Something like this. According to the principle that I've taught with engulfing candles and pin bars, we should see a large amount of engulfing candles as price appreciates up to the resistance area, and then bearish engulfing candles as price drops down to the support area. But more importantly, when price reaches these areas of support and resistance, we should have pin bars and engulfing candles that will signal price is going to go the other way. So at our resistance area we should see sellers coming into the market that will make bearish engulfing candles. At the support area of the market we should have buyers coming in that will create bullish engulfing candles. And the same works with pin bars. We will have sellers coming in at resistance that will create bearish pin bars, and we'll have buyers coming in at the support area that will create bullish pin bars. And to prove this, let's look at this range. So price comes up to our resistance area. Here's our resistance. Here's our support. Then around this area we have our first pin bar here. A small body with a long wick. That's then followed by a large engulfing candle, a bearish engulfing just right here. So there. And that's followed by a bearish pin bar. Just after these signals, so 1, 2 and 3, price depreciates and starts its journey back to the support area. Once we get down to the support area, which is down here, we get 2 pin bars, 2 bullish pin bars. We get a third pin bar here. So small bodies and large wicks in one direction. We have another pin bar here. And then price soon appreciates back on the upside. Let's look at when price reaches resistance once again. So here's our resistance, here's our support. We have a pin bar appear here, followed by an engulfing candle. We have a large engulfing candle here. We have another pin bar here, and engulfing candle, and then a smaller pin bar just here. After these signals are given, price depreciates. When price returns to the support area, once again we have these same signals. We have a pin bar here, small body, the large wick, followed by an engulfing candle. We have the other engulfing candle here, and then a large one here. When price returns to the support again, we have this large engulfing candle, and we have a pin bar just here, small body, large wick, and price then appreciates. So pin bars and engulfing candles can act as signals to open positions in the market if we can identify a range, an area of resistance and support. And we have pin bars and engulfing candles appear on this resistance area, and they're bearish engulfing and bearish pin bars. These could act as signals to sell or go short. When we have bullish pin bars and engulfing candles on a support area, these could act as signals to go long and buy. So you can see how these candles can act as signals to open positions, just like in a trend, on an uptrend or a downtrend. It's also interesting to note that when price does eventually break out of this range, price appreciates up to this resistance area, we do not have as many signals. There is an engulfing here and a very small pin bar, but apart from that there are no signals to go short compared to these other areas in the market where we had numerous signals to open positions. Now when we have a pin bar and engulfing candle together, so where an engulfing and pin bar are next to each other on a candlestick graph, I believe the signal is stronger. For example, at this resistance area we have a very large engulfing followed by a pin bar, a bearish engulfing followed by a bearish pin bar. Price appreciates immediately after this signal pair. And here's another example of these signals together. We have a pin bar, maybe not as clear as other pin bars because we do have a fairly large wick below, but we do have that rejection, and that would count as a pin bar. That's followed by a large engulfing, and price depreciates almost immediately after this signal pair is given. And then we have The same on this support area. We have a pin bar followed by an engulfing, and price appreciates immediately.